Cathie Wood. The ETF experts Cathie Wood and China discuss whether these underperformers will be able to make a return in 2022. In 2022, China will face off against Cathie Wood, who is expected to make a return. The S&P 500 may be reaching new all-time highs after finishing the year on a record-breaking high note, but not every sector of the market has been so lucky. Cathie Wood, a well-known investor, a MD, her Ark Invest firm had a disappointing year last year. For example, for the year 2021, her ARKK Innovation ETF, which owns equities such as Zoom Video and Palantir, had a 24% decline in value. Tom Lydon, the CEO of ETF Trends, believes that a group of equities that has been battered this year will rebound. Investors should pay attention to Ark Invest's long-term prospects, according to him. Cathie Wood is an investment in which I want to remain involved for the next 20 years. It's simply a matter of hanging in there. As Lydon said on CNBC's ETF Edge on Monday. In spite of a poor performance last year, the Ark ETF has delivered superior returns over the long run. The ETF, for example, has gained 138% over the previous 3 years compared to the S&P 500's return of 89%. As with Lydon, John Davey, Chief Investment Officer of Astoria Portfolio Advisors, believes that the next great tech company will most likely be discovered in an Ark portfolio. The bottom line is that she is arguably the most qualified person available if you're hoping to identify the next FAANG company to invest in. To be honest with you, she's had 4 or 5 good years and 1 poor year, so I believe it's all right, Davey remarked in the same interview. However, it is possible that the recovery will take time. According to Davey, a change in the market's attention away from profits and toward profitability during the next interest rate cycle might be detrimental to these types of high-growth, speculative businesses. When it comes to disruptive growth, like as Bitcoin, you need to make sure you're sizing your portfolios accordingly. It has to be less than 5% of the total. As long as it's less than 5%, you'll be able to ride out the storm, Davey said. Customs officials from China hoist a Chinese flag before daybreak along the bund in front of skyscrapers in Shanghai's Lijiazhui financial district as part of a practice for a flag-raising ceremony scheduled for later in the day. Chinese stocks, which have been hampered by regulatory restrictions and uneven economic development, have also fallen precipitously in 2021. The FXI China Large Cap ETF had its worst year since 2008, falling by 21%. Lydon believes that this group should also be purchased because of its vulnerability. China isn't going away anytime soon. In the future, China will continue to play a significant role in global infrastructure, and we are obviously intertwined with the Chinese people on a daily basis. China, I believe, represents a purchasing opportunity. Lydon believes that when you combine China with internet shopping, it becomes a topic that we will be talking about for the next 10 years. The QEB China Internet ETF, which contains equities such as Alibaba and Pinduoduo, has plummeted 67% since reaching a record high in February last year. Davey agreed with Lydon that China might make a return if investors are ready to put their money aside and wait through the current instability in the market. We've always advised investors that this is a long-term investment. As a result, it is adequately sized in our portfolio once again. As a result, I believe you should continue with China. Don't just buy Bitcoin, earn it. When you spend with BlockFi, you can earn up to 3.5% back.